Good morning, students. Today I want to talk with you about ethics. Ethics is the umbrella of accounting. So let's go to your Wolf Den and take a look at where the slides are. If you go to your Test 2 material, two things you need for today would be the PowerPoint slides and the ethics definitions. If I were in class, I would be handing these out to you. So let's first pull up the ethics definitions and let's take a look at those. Okay. Several definitions here. The first one is a very formal definition from Webster's Dictionary. Ethics is a discipline dealing with good and evil, with moral duty, moral principles, practices. Very nice formal definition. Then we have some companies that have defined ethics. Eli Lilly is a pharmaceutical company which defines ethics as no Lilly employee should do anything or be expected to do anything that they would be ashamed to explain to their family or friends. I like that definition. If you're trying to hide it from somebody close to you, chances are it's something that you shouldn't be doing. So I really like that one. Eastman Kodak, this is Kodak cameras. Business ethics is a policy by Kodak which emphasizes that Kodak's business practices throughout the world are conducted in a manner which is above reproach. In other words, they set a bar, and most companies, they say, have a certain bar that they would set their ethical values at. Kodak says that theirs is actually above that, so they have a big range there where they conduct their ethical policies above everybody else. Now, General Dynamics is aeronautical equipment. They say that the definition of ethics, according to their vice president, is telling the truth and being fair and doing no voluntary harm. The only problem I have with that one is, what if it was something you didn't intend to do, like a drunk driver? I mean, is it still considered ethical if you harm somebody but you didn't intend to do it when you shouldn't have been drinking and driving in the first place? So that would be one I have a little bit of a question on that definition. The example that they give is, what about people who are in a position taking a buyer to lunch, suppliers? If somebody's judgment is compromised by an action, chances are it's unethical. So, for instance, businesses, they buy products from other businesses to manufacture the current product that they're doing. For instance, maybe a lampshade is outsourced or bought from somebody else, and they're putting together a lamp for resale. So, suppose they get all their suppliers together, and one of them wants to take the buyer to lunch. Well, is that intended as a bribe or a means of swaying their judgment? So that would be the problem. And I know one of my students worked at a local manufacturing facility and said that their policy was they couldn't even have a cup of coffee with the supplier of a product. So it depends on the company and what they said. EDS, electronic data systems. Would we want to do business with ourselves? This is a good practice. I like that definition. Are you upfront, and would you be fair if you were conducting business with yourself? So that's just a very good practice to maintain. Now, as far as memorizing any of these, you don't have to memorize them, but do have an idea about my definition, which I've comprised from all of these. And I say that it's a system of morals which guides the behavior of an individual when confronted with doing right or wrong. So if you look at right on one side of a continuum and wrong on the other, we know things that are definitely wrong. Those are illegal things, illegal activities. And so we look at things that we consider right, but then there is a gray area in the middle where there's some situations that we really don't know where to put them. And that's what I want to look at today. How do you make those decisions? A good rule of thumb, it says the law tells us what we can do. That's the minimum standards for ethics. But ethics tells us what we should do. And one example of this might be the abortion issue. There's many opinions on that, and abortion is legal, but for many it's not ethical. So you might want to look at it in that perspective. The law is the minimum standard for ethics. Okay, let's go to the PowerPoint slides now and take a look. Let's save this. Okay, I want to pull up our PowerPoints. Just kind of go through here and answer any questions you might have that arise from these sets of PowerPoints. Again, the law tells us what we can do, but ethics tells us what we should do. And here were my definitions again, pulled up on the front, just a little abbreviated version. Here's the continuum that I was talking about. On the wrong side, we have several examples, and if I were in class, I would be asking you for some. Situations that we definitely know are wrong are tax evasion, money laundering, improper accounting, insider trading, defrauding investors. Right would be, the minimum standard would be what's legal, and we know that everything on the wrong side is illegal. But then I want to look at some of the gray areas. I already mentioned the buyer taking a supplier to lunch. What about accepting gifts from clients? And then getting into one about if you were in a situation where you had to supervise an alcoholic friend. So let's take a look at the illegal or wrong ethical choices. Al Capone was caught for tax evasion, so not paying your taxes, definitely unethical, illegal. And this is a page out of an accounting magazine where the IRS was actually trying to convince students that going into accounting can be very rewarding and challenging, and you can catch criminals. Money laundering, we think about this mostly with the mob, but it's when you're obtaining money illegally from things such as drug deals, gambling, prostitution, and in order to report it on your taxes and make it look better, we clean it up by channeling it into a legitimate business such as a restaurant perhaps, or a store. And once that money has been put into that legitimate business, it comes out clean, so to speak, and we can report it on our taxes. Now, according to the IRS, whether it's legal or not, it should be reported, such as gambling. Okay, so that should be reported on your tax return. But, you know, the mafia is not going to report illegally obtained money, so they want to clean it up before it's put on their taxes. And this is, like I say, unethical and illegal. And we know about the Enron scandals where there was improper accounting that was done, Enron being the oil and gas company out in Houston, where they took their financial statements and they took liabilities, which is debt, and they put them into fake partnerships instead of showing them on their financials. This was Ken Lay, and just some pictures of Enron that I've shown you in class before. But Ken Lay was going to prison for about 25 years and ended up having a heart attack in Colorado before he was sentenced. Some people speculate possible suicide, but it was never proven. And then the company went bankrupt. You see the sign, the employee waiting for a ride. So it was a very sad situation. The CFO did end up going to prison, and Arthur Anderson was the accounting firm that was dismantled by the SEC because of it. And then WorldCom, around that same time, I've talked to you about them. They did improper accounting, which was illegal, and this was Bernie Ebbers. Okay, he was in charge of it. What they did was to take expenses, which were supposed to reduce your net income, and they kept showing them as assets. So they were improperly showing their expenses. And Bernie ended up going to jail for 25 years. He was the one that said, "Oh, shucks, I didn't know anything about it." So they didn't believe him because he was pretty much involved in every aspect of the business. And then Arthur Andersen, again, was the company that was dismembered. WorldCom became part of MCI, which is now part of Verizon. So it still hung in there, and it was just sold. Now we know about Martha Stewart. I've mentioned to her insider trading. Now, Martha actually sold some stock that she had in a company called M-Clone. And the reason she sold it is because she knew who the owner was and called in her broker that day and found out that the owner was actually selling his stock. So she decided to sell hers too. But it all had to do with an application for a cancer drug that they were trying to get approved, and it did not get approved. So the owner knew that the next day the stock would drop, so he went ahead and sold it. Now, Martha didn't actually know, or they never proved that she knew anything about the inside part, the stock dropping, but she just sold because she knew the owner was selling, so she thought it was time. She ended up getting brought up because she lied to the government. She and her stockbroker, Peter Bogdanovich, altered the agreement and added a clause that said Martha would sell when the stock fell below a certain point. And by doctoring up that clause, she, in essence, lied to the government about it. She got 6 months in jail. They really liked Martha in jail. She helped them place in a Christmas contest, and the ladies made her a shawl when she left. You can Google Martha Stewart leaving prison, and you'll see the shawl that she wore as she got on the airplane. But then after that, she had 6 months house arrest. During this whole time, she had to give up her television shows. She had to give the reins of her company over to somebody else. Now she's back at the helm, but I think they used Martha to set an example. Ironically, some people have compared Hillary Clinton to Martha, and the fact that Hillary got by with her lying to the government, but Martha did not. So she was used as an example to others. Bernie Madoff. Okay, he was sent to prison for Ponzi scheme, which is basically a pyramid scheme. And this went on for 30, 40 years. Had top investors, Kevin Bacon and others invested in his company, the rich people, but then he also had some charitable contributors. And he would take their money and spend it and just put a portion of it away and give them a little interest every year. So they thought they were making a lot of money. And in the end, all of the money that these investors had originally put in his company were gone. So he's now serving life in prison, and his family has nothing to do with him anymore. Both of his sons are dead. One committed suicide, one died of cancer, and Bernie's wife quit going and visiting him. So it's a very sad situation for Bernie Madoff. And this is what a pyramid scheme looks like. You start with a few investors. By the time it gets down to the bottom of the pyramid, it's hard to pay back everybody, and it's eventually going to collapse. Ponzi was the guy who originally started this type of scheme back in the 20s, I believe. And then if you've ever watched Wall Street, Gordon Gekko with his Greed is Good, click on this link, go to it. Speech about how greed has made America what it is. And I would normally show this in class, but you click that on and go take a look and see what it says. Now let's look at the gray areas. These are the ones where you have to decide, where does this go? Is this right or is this wrong? And I mentioned to you the buyer taking the supplier to lunch. It depends on the company and what they say. And if the company says you can't have a cup of coffee with the supplier, then you can't. So it all comes down to where you put it depends on what your boss says in this particular case. As long as it's not illegal, it's just something you have to decide how to handle. But remember, once it gets into the illegal area, it's definitely unethical. accepting gifts from clients. Companies like Hallmark Cards make their employees sign an agreement that they will not accept any gifts from clients. Now, this is very different from when I worked in a bank, and we would have people that we had helped. I was a secretary, and there would be little old ladies bringing us cookies at Christmas, gifts of, a bottle of wine. I even had a little nice bracelet from a jewelry store owner. And as long as it's okay with your boss, it's fine. Now, as far as the President of the United States, they're all the time accepting gifts from foreign dignitaries. And if that gift is valued at over $150, it has to be reported, turned into the government. It becomes government property. And the only way the president can keep that gift is to buy it back from the government when they leave. And this actually happened with Ronald Reagan and his wife Nancy when they went to England, and Queen Elizabeth gave them a little trinket box with their initials engraved on it, and they wanted to keep it when they left, so they actually purchased it from the government. Otherwise, those types of gifts go to the Smithsonian, and they're housed in a storage unit. Okay, now this one's very interesting, and I want you to think about it. The scenario goes that you've started working in a manufacturing facility on an assembly line with another person that you didn't know prior to this time, and you get to be good friends with this person. And you continue working many, many years, and for some reason, you are elevated to a position of being a supervisor over this individual that you've worked with for many years. Now, going back 20 years, you've shared holidays together, you've eaten together, your kids have grown up together, and then all of a sudden this individual, let's say these are two men, the wife dies, and he kind of goes off the deep end and starts drinking. Now, back when I started giving this scenario, alcoholism on the job was a problem. Now it's becoming more of a disability. So keep that in mind if you've been in Mr. Smith's class or some others, that now maybe I need to change this to a drug problem, because that would definitely be wrong. But now they consider alcoholism an addiction, a disability, an inherited situation. But back when I started this scenario, it was not. So let's say that this individual does start drinking or abusing some type of drugs because he's so distraught over his wife, and you're his supervisor. Well, what do you do? What would be your choices here? And if I were in class, I would list these on the board, and I would ask you to tell me what are the choices in this situation. Well, one thing you could do is maybe seek help for him. Okay, try to talk to him. Try to get him help. Or if you're really hard, you might just go ahead and fire him. You might try transferring him, getting him to take early retirement. There's all types of options that you might do. And again, it all comes back to the number one thing is, what does your boss say? What's the company policy? Is there a no tolerance policy? If so, you have no choice but to fire him or have him take early retirement. But if you do have options, you might want to treat him like you would want to be treated. Now, you realize there's a bit of a conflict here because you've been friends, and now you're having to deal with a situation that you hoped would go away. But you might be a little tolerant at first and try to get him help and talk to him and reason through it. And if that doesn't work, I don't know, some people might put him on Dr. Phil. It might be tough love or something like that. And the last thing normally you would want is to lose your job, so that might be the last option for you to do with him. So it's a whole list of things that you might think through in a situation like this. Well, how do we analyze these situations, these gray areas? And these are 3 ways that are mentioned in the article that I pulled this material from. The first one is the utility model, trying to make the most people happy. And this is actually an economic model. Utility means satisfaction. So let's go back to the supervisor. If you're trying to make the most people happy, that would be the individuals working with him, because this might be dangerous. So, in this case, removing him from the situation, whether that's early retirement, transferring, which is just transferring the problem to somebody else, having him